Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin. We're going to be looking at the move it's in. It has retraced about 5% from its local top here. So if you guys like the content, please go ahead and subscribe to the channel. Give the video a thumbs up, and also please check out the Telegram channel in the description below. Let's go ahead and jump in. So we've been following this potential reaccumulation range for a while. And we're just going to kind of see where we are potentially in the current phase of this potential reaccumulation range. So the first thing to note, right, is we just start here. We have this, we have this first wick up, or the first candle up, I should say, approximately 10%. This one here got us up 10% too, basically into the new reaccumulation range. From here, we had a red candle that at the bottom of the candle is where I'm defining the lower bound on the accumulation range here, and then the same thing over here. From that point, you can see that as we've noted many times. Let me get a brush here. So we came up to the top, right, and then straight back down to the bottom. Okay, so up to the top, down to the bottom. Okay, so up to the top of the range, down to the bottom of the range, same thing. Then we came back up, and then we moved sideways for a while at the top. And then we went back up, and then we moved sideways for a while at the top, and then back down, and then back down. This one wasn't all the way down, and then back up. But this time we went above the first two local tops here, right? We went above that area. So up here, same thing. In this one, we came up, and then went above it, which was higher than the sideways movement top here, and then this top here. Same idea. Then we came down. Right, we came down, one small rally back to the top. Sorry, we came down, one small rally back to the top, down, rally back to the top, and then we had this red candle, right? And this woke everyone up. Same thing here, it woke everyone up. Following the red candle from the last accumulation phase, we then went back up somewhat, right? I mean, we didn't go back to the top, but we did go back up to around 9,700 from a low of 9,000. And then we came back down to the bottom of the band and then went sideways, okay? So if we're continuing, right, we would say, okay, we went back up. This one went a little higher than this one. Back down. And then if we were to continue, like basically the last stage of the potential reaccumulation range, and this is a Bitcoin, right, then we would move sideways, okay? Or basically, plus or minus a few percent, of course, right? I mean, this is just noise. So again, one of the things we spoke about when looking at this is noting that, say, from that first candle to maybe this strong correction here, it was approximately 43 days. Going from this one to this candle, it was approximately 29 days. So if we treat this one, right, as the same as this one, you can see it's about 2/3 from from that correction to when we finally started to break out, or started the move before we broke out. And then if we were to extend this from that candle, right, it's as we said 41 days. And then the same thing here. If we were to take about 2/3 of it, we would expect at least another week or two in this potential reaccumulation range. So a week ago, or maybe it was 3 or 4 days ago, I was asked what is Bitcoin likely to do in the short term? Well, again, it's a random walk in the short term. It's hard to say. If we were to repeat the structure of the last reaccumulation range, which, by the way, we have been following since way over here, before all this nonsense happened. We identified this as a potential reaccumulation range fairly early on. Now, with that said, if this is the case, then that means that the next we're gonna stay in it, right? We're gonna stay between 10.9 and a little over 12,000, maybe 12.1 or so, somewhere in that price range, for the next week or two, at the very least, right? Now, if on the other hand, right, I don't have a crystal ball. If on the other hand we instead decide that now is the time to test the 20-week, right? Let's pull up the 20-week and see where we are. The 20-week now is at 98.76. So every time we see a correction, we want to take a look at the 20-week just to identify where the bullish level of support would be, right? So in order to stay macro bullish, for say like a multi-year bull market, I would say Bitcoin needs to hold the 20-week moving average as support. And of course, the reasoning is none other than just looking back at history and seeing that the 20-week moving average, again, as I've shown before, tends to be our support region in a bull market. And even during these bull markets, we see these pretty nasty corrections, right? 30% down to the 20-week, 30% down to the 20-week. Here's another one. This one was 25% down to the 20-week. So you look at it, you look at it on a macro scale. This one was like 40% down to the 20-week. You look at it on a macro scale, right, and it looks like it's just all fun and games, right? You just look at it and say, oh, well, it basically just went up. But, for those of us who lived through this, you do have to live through those 30% drops, those 40% drops over the course of a few weeks, potentially. 5%, again, this is business as usual, and nothing has really changed. The key thing to remember, right, is that from a macro perspective, as we've mentioned before, let me actually pull up the BLX here. I'm just going to click on Ethereum so I can pull it up on this one. So I'm just going to pull up the BLX. So remember, as we've said, it's a slower methodical move up to 20K, right? And it's likely not going to go up here and then come back down and then sustain 20K soon. If we get lucky, right, maybe it'll come up and then hold it as resistance, and then come back down and continue to give us time to potentially sell short-term bubbles and then reaccumulate within our trusty regression band, right? So this would be ideal to take advantage of any bubble that may or may not form. If it does, you can dynamically take profits on the way up. And then as long as we stay right within the accumulation region, it's just business as usual. Nothing has really changed. We're not in it. I'm not here to day trade or anything like that. We're just looking at these macro shifts in the market and identifying the fact that to get to a sustainable $20,000, it's probably going to take us to at least till the end of 2021, probably early 2022, before we have a realistic chance of getting to a sustainable 20K. So again, we're really not in parabolic territory for Bitcoin. We're not in that. And when I say parabolic territory, I mean we're not in parabolic territory of going to like 50K, 100K by 2021. We're just not. We're always in short-term bubble territory, right? I mean, short-term bubbles can happen on a dime with things like Bitcoin and other cryptocurrencies. So always consider that a short-term bubble could occur. And if it does, we want to take advantage of that. And if it doesn't, right, it's just a slow walk up. Anything in between is noise once we get to 20K. Once we get to that sustainable 20K, as we've said many, many times, that is where we'd be looking to go parabolic, right? So looking again at the macro scale and just recognizing that we have these parabolic moves: bear market, methodical move up, parabolic move, bear market, methodical move up, bull market, parabolic, right, bear market, and then these slower, more methodical moves up, right, where you see these healthy corrections along the way, and it doesn't really get too far ahead of itself. This is the phase that we're in right now. So I think it's important to identify like what phase are we in. We're not in Bitcoin parabolic mode to 100K phase. Like that's just not where we are right now. So don't get too far ahead of yourself when identifying, what you expect to happen and maybe how you would play out this market, right? We're not in that parabolic phase yet of going to 100K. We're just simply not there, and we will not reach there until we get to a sustainable $20,000. So, looking back here again, it's just business as usual. I know I say that a lot, but the thing is it doesn't really change. We're gonna see these moves time and time again. As far as I'm concerned, unless we break down below 10.9, the 20-week moving average is more of it's kind of like a thought, but it's not something we really need to focus on at the present time because we're still fairly far away from the 20-week moving average. So if you see us fall below 10.9, on the if you see the price of Bitcoin falling below 10.9, which is this level here, this is when I would say, all right, it's time to take a look. Where is the 20-week? Because once you get there, right, the 20-week is only about a 10% drop, right? It's approximately a 10% drop from that lower bound, and this whenever we fall there, I don't know if we're going to fall there soon, or if it's, or if we're going to continue to just reaccumulate here and then break out again. But whenever we fall, what we're going to want to do is we're going to want to hold that line wherever the 20-week is, whether it's at 98.76, whether it keeps going up and we test it at 10,600 in October, wherever it is, in order to confirm the multi-year bull market that we want to see. That's the first step, right? It's holding the 20-week moving average. So business as usual. I wouldn't get too wrapped up in these short-term moves, right? Just stick to your strategy of whatever your dollar cost average schedule is. And in my opinion, not financial advice. And then when it does go parabolic, this is when you start. This is when I would start dynamically dollar cost averaging my sales. So I hope you guys enjoy the information. Please subscribe to the YouTube channel. If you want access to the premium content like the risk levels that I use to trade and the premium alerts in the chat room, the weekly videos, the weekly reports, just for premium subscribers, make sure you check out my website, intothecryptoverse.com. Again, the prices are going to be going up on September 28th. So if you want to get grandfathered in at the lower price, make sure you sign up before then. And you can also sign up for 6 or 12 months to get a nice discount. I think for 12 months, you get approximately a 15% discount. So check it out. At the very least, check out the YouTube channel. Make sure you subscribe. Check out the Telegram channel, and I'll see you guys next time. Bye.